All right, good morning. This is Axel Merk. Happy Friday with my morning briefing here. It's Friday. I guess that's the major news here, which means that if I just look at my Bloomberg screen here, price of gold is selling off right now, at least a little bit, not much. I mean, we've been up so much of late. We're currently $8 down on the futures, and we're down $9 on the spot price of gold. Friday is news in the sense that it's often an unwinding of positions, especially in times of crisis. People often don't want to have positions over the weekend because you just don't know what sort of policy intervention is going to come that's going to change the rules, or some major health news or breakthrough, or what result of a trial is going to come out, and so a lot of the speculators don't want to have positions over the weekend. We did have yesterday a rumor of one of the drugs that said, oh, the trial failed and the market tanked, fell a little. The S&P futures, at least, S&P went down. And then it was corrected. No, this wasn't a failure. It was just this particular one trial. They didn't have enough participants, and so they'll pretty much have to scrap that one and start over. So that's not exactly that the drug is bad. So lots of things driving the markets. Obviously, the glass has been half full much of the time. Yesterday, it was pointed out that it takes fewer flows to move the markets, meaning that the liquidity in the market isn't all that great. In fact, that particular analysis suggested, and there was a Bloomberg analyst that published that it hasn't been that extreme since '96, which means it takes fewer buyers to move prices, and so that's it doesn't mean prices aren't sustainable, but the lack of depth and is quite noteworthy in that sort of context. Other than that, lots of talk about opening up the economy and all kinds of things. In Germany, where I mentioned that they are coming up with meticulous rules as close as how to use the bathroom, so to speak. They're opening up churches in Bavaria on May 4th. Incidentally, it's a Monday, so presumably that means they're opening it really the following Sunday or weekend. But the rule is going to be wear masks and 6 feet of distancing. And so we're starting to see those sort of things come up. I have continued to be amazed how little effort is spent on the opening up part. And it is so sad in my view to have the two camps, that one say, hey, we got to shelter in place, and the other thing is we have to rip off the band-aid, we got to go back to work. Of course we have to go back to work. We got to do it in a way that is sustainable. And so I would much rather see $1 trillion spent on that effort, and that includes everything from testing to vaccine development and other things. And of course some of that stuff is happening in the background. But when people see that there are unreasonable things in place, then clearly people will start to object and break rules and whatnot. And unreasonable things would be there. There's in every community that's sheltering in place, almost certainly somebody can think of some activity that could be taking, say, place safely, but is currently prohibited. Understandably so, because you need to use a sledgehammer at the outset if you pursue a shelter in policy place. But then, of course, you can become more refined as things move on. And so we'll see how this progresses. I'm sure that in different regions of the world and different countries, states, communities, counties here, it's going to be a back and forth, and we'll have plenty to complain about. Lots of people are concerned about a second wave. The Wall Street Journal this morning has an article I encourage everybody to read about the 1969 Hong Kong flu. That we've mostly focused on the Spanish flu, but it's very difficult to draw comparisons. In the Hong Kong flu in '69, apparently life continued to a significant extent as normal. People were wearing masks. People were getting sick very extensively until a vaccine was available. And there were some of the similar concerns. There was no social distancing, but masks were in place. And so it might be helpful to study that in more detail. I'll try to do that as well in the coming days, and report if I see or find anything. And so lots of things happening on that ground. I am looking for my mouse here in my screen. I don't have it, so let me just continue to. Here we go. Now I get my mouse back. Other than that, we had a webinar yesterday, and lots of questions about the S&P sustainability. Also, lots of questions about gold, and on the price of gold. Let me just since much of my audience is interested in gold, let me just expand on that, because I don't think it can be said enough. It When you deal in a physical commodity, you're dealing in a physical commodity, and I think it was extremely clearly illustrated with oil. The small print matters, if and especially if you deal in a derivative. That in a derivative, well, you get the delivery in May. You have a right to deliver it, and then you have to pay for storage fees. You have to pick it up. You have to worry about logistics and everything. And so, when you hear about the spot price of gold, do you know what that is? Well, the spot price of gold, commonly quoted, is the institutional trading price of a London bar in London. And so it can be that gold elsewhere in the world has the same price. It's sometimes a little cheaper. Usually it's more expensive. The premium for anything other than London bars tends to be higher. The London bars are these clunky James Bond movie bars, and they have a varying weight, varying purity, and the reason why the specifications are more lax, and ultimately the values you find, of course, on the fine ounce content, but the reason is to make it cheaper to produce, to be able to kind of to have that lower spread. When you deal a kilobar already, the spread tends to be a tad wider, not much, and of course today's production capacities and qualities are so good that you can produce a very high quality bar without much extra cost. But that when you go to a coin, minting a coin is more expensive than minting a London bar, and so that's one thing. That's why the premium tends to be higher for those. And then that's why also why the spreads are higher. The volume is lower because then you're moving from institutional to retail market pretty quickly. The spreads tend to be wider, and the reason why the spreads are wider in retail is partially because of the amounts involved, right? A London bar is worth several $100,000, and the coin is worth a 1 ounce coin is worth $1,800 or so. And so just the handling of a transaction, there's a cost associated with it, and then of course the other part is logistics, and then a big chunk of it is creating them in the first place. So refineries are closed, not all of them, but many of them, and so the Royal Canadian Mint is closed, for example, and so they don't make them right now. They don't make Canadian maple leafs right now, and so surprise, surprise, when there's high demand, people don't have them, and then the price is going to be higher for the few things that are available. And so there's no conspiracy here or anything. It's just these are just the dynamics of a physical market in the era of a pandemic. And so those production backlogs will be resolved. Bigger story, I think, is what's going to happen to the price of gold medium term. And lots new information, or lots new opinions at least, on inflation itself. The chief investment officer of J.P. Morgan was out this morning on Bloomberg Radio. The reason I'm hesitating here is I'm trying to move my mouse, which seems to have some issues. David Kelly is his name, and he made a good point. He said that part of the reason we hadn't seen more inflation last decade is because of income inequality and wealth inequality. When a lot of the money that's being earned is earned by people who don't spend it, well, you're not going to get much inflation, right? You tend to get inflation when there's a lot of demand for goods. And so he's arguing that now we have more pent-up demand for goods, and the folks who will actually spend the money will have increased their savings, but will have also be beneficiary of many of the government programs. And so the money is going to be more directly impacting the things that the places where inflation is going to be generated. And I've argued here before as well that a corporate tax cut, for example, is sure there is, in the medium term it can be inflationary, and I've cautioned about that. if you drive an economy to be too hot. But let's assume we get an infrastructure spending, and it appears that both Republicans and Democrats are open to that. That's a much more inflationary type of policy than a corporate tax cut. And so let's just keep that in mind on the back of course, of monetary policy that's absolutely immense. And by the way, I continue to look at my Bloomberg screen. As I talk, the euro is jumping higher here a little bit. These are straight line moves here, and it's quite volatile moves. It's an interesting thing that to see on a Friday. Liquidity is lower, and prices are zigzagging around. There could be news driving some of that, and but with my Bloomberg mouse here, with my mouse here being a little inhibited, I'm not going to be able to see all of that on live basis. A few other live updates. I've been giving you the 3-month LIBOR rate, 102 right now, so it's gradually coming down tick by tick every day. In contrast that with the 3-month Treasury bills, it's now at 11 basis points, and so the spread there is still way too high for normal times, and the effective Fed funds rate is 4 basis points. Other than that, I mentioned already gold is down today, currently down 40 basis points. The strongest currency currently is the euro. That's jumped up here of late. Yesterday there was disappointment on the stimulus out of the Eurozone being kind of botched or much lower. People were expecting then that there would be a $2 trillion stimulus. That does not seem to be happening. We're currently talking about 500 billion only. And so these are still large numbers, but obviously the Eurozone economy as a whole economy is very large. And so, now all that said, prices are moving, and I don't see the headline. There may well be some news that has come out here in the interim that I don't see here on my screen. Then just a few other things. On the back to the virus here, somebody pointed out to me on social media that the Swedish death rate is very high, and I looked at it and said, well, the number I tend to follow the most is and Sweden, for those who are not aware, is one of the countries that has one of the least restrictive policies in place. And so if you look at the infection graph, the logarithmic chart, while the curve is not flattening as rapidly as in other places that have restrictions in place, they do have a flattening of the curve. But it does appear that the death rate is much higher than especially in other Nordic countries. I haven't heard of hospitals being overwhelmed there. Somebody has input as to why that is the case. I'd be curious. It's of course possible that not sufficient number of people are being tested. That's, in my view, the most likely one. That a lot more people are sick than are aware of. And so we just don't capture everybody in that space. It's going to be very interesting if we do this real-time experiment, how things will be if and when we get a second wave. Will we have the herd immunity, so to speak, in Sweden versus other countries? So will it have been worthwhile, so to speak, to keep things more open than not? We haven't heard much about this app that Google and Facebook apparently are working on contact tracing. Controversial, of course, from a privacy point of view, apparently with lots of privacy safeguards in place, and strictly on a voluntary basis. Got an email yesterday from the high-rise in the office building where we usually work, and they obviously, office buildings are scrambling on what policies to put in place, because in an office building you've got to take an elevator. Right? I mean, we work East Coast hours. When I take the elevator at a little after 5 in the morning Pacific time, usually there's nobody else in the elevator. But during rush hour, right, at 9 o'clock, at noon for lunch, and then at 5 p.m. when people go home, these elevators are full. So what are you going to do? What sort of policies are you going to have in place? You can't just add another elevator. I have suggested that they should open the emergency staircase and let us run up to several dozen flights of stairs, and so I'd be up for it, but that's probably not the way that they're heading in. Bonds today, moves are minimal here. The 10-year is pretty flattish. The 30-year is down 7 ticks. European markets were kind of mixed earlier today. The equity markets I'm referring to, and then yes, almost forgot here, the Italy is running a deficit of over 10% of GDP, and one of the major rating agencies may announce as soon as today whether they're going to downgrade Italy. And so let's see how markets will react, and ECB is probably going to be there to say whatever it takes, and I wouldn't be surprised if maybe the move here that happened in the euros is somewhat related to that, and if not, then it's related to positioning. Let's always keep in mind that we try to put a news story onto market moves, and maybe that is overdone. I'm just looking here. One headline is Euro area funding gauges ease most in 6 years. So it's a central banks obviously are trying very, very hard to keep these markets as liquid as possible. One of the things I mentioned earlier is gold. Price of gold has come down. One of the things we do see is that whenever the price of gold has dipped down, a lot of buying has come in. Gold ETFs globally have had increases, I think, for 25 days in a row now. That's rather unusual. Usually there's a back and forth. And so not giving an investment recommendation yet. And on that note, I don't think I've shown you my disclosure. So let me get that out of the way. So I have that. By the way, next week I will hopefully have my favorite microphone back. So the microphone is sheltered in place at a place where it is not reachable for me right now. I'll hopefully get it back over the weekend, and so I've had experiments with different types of mics in recent days, and gotten some comments that they're not ideal. So it is what it is. We all are improvising here a little bit in this sort of environment. And by the way, similarly, one of the things I didn't grab when I decided to stay and work from home for an extended period was a camera, and so I'm using here a notebook camera, and they work all right, I suppose. And buying new cameras, they are triple the normal price and not available and all that, and so being a cheapskate here, I decided this is just fine. Anyway, we haven't heard much of Boris Johnson, by the way, in the UK. He is still staying low. My best guess is that in a week or so or two, he is going to be back front and center, and we'll see him. President Trump, we do see front and center, helping to make sure that everything we do gets politicized. We love him or hate him. And it is just what it is, right? And it is not my role here to judge it. I am frankly getting very tired of just the political comments, because I really could care less about that. I care about what we can do to be safe and to get moving and running. And then at the other end of the spectrum, I care about obviously the investment side of things. On that note, I am running a poll right now whether people have more or less time on their hands than usual. Lots of people are suggesting, hey, now you got some more time, why don't you do this or that? Just speaking for myself, I'm busier than ever, both professionally and in my family life. And so if you're not busy, get busy. A lot of people saying, oh, when this is over, I go back. This is not going to be over. There's going to be a next phase. And so embrace it and think about what you want to do in the next phase, and do something useful in the current period. Binge watching is kind of all right for a while, but if nothing else, do some household chores, for goodness sake. Clean the windows or do something else. Sorry about that. And so, or ask others who have a lot of work, whether you can help them, volunteer, or do something, right? Do something useful with your life, and don't be a couch potato. It's not good for your psyche. It's not good for anything. And so you're getting here friendly mental health advice here from your favorite market prognosticator, I suppose. So do with that whatever you wish. But quite seriously, it is not good for mental health to just be on the couch all the time. We are human beings. We need to be engaged. We need to be productive. And there's always an excuse as to why we can't be that. Well, forget about the excuses. Let's think about what we can do. Let's get off the couch and do something. And if you really have nothing to do, then come over here. I have plenty of projects for you. I can put you to work. Obviously, can't do that because of the social distancing requirements, and obviously it's easier said than done if you're locked up in a small apartment. But even there's always things to do that exercise one's mind, and then obviously also physically. Exercise is important. It is important to stay healthy. Indeed, if you may have read one of these articles about the what they do in isolation in Antarctica and whatnot, and they say they're actually more social than they've ever been because they used to be isolated for months in Antarctica, and now they're invited to Zoom meetings of their pals back home. Because instead of going to the bar, friends back home have Zoom meetings, online virtual cocktail meetings, and they're inviting their friends at the Antarctic research station. So those folks who are used to practicing isolation are actually much less isolated than they are right now. They all say that you've got to have a routine, build a routine, be busy, be physically fit, and then of course when it deals with social interactions with others, be particularly thoughtful, because you tend to get on each other's nerves, right, if you're too close together all the time. So be more thoughtful than usual, and of course it's easier said than done, and then for certain people and it's easier, and especially for the young people it's not always easy. But in any case, enough of that. As you can see, I've said enough about the markets. That's why I rambled on other items. But it's Friday, hey, and so I'll get back to my other work, and have a great weekend, and take care. Bye.